Good afternoon, ladies and gentlemen, and welcome to this afternoon's session of SmithNovak's virtual NPL. This session is on online platforms. My name is Edward O'Brien. I'm an advisor at the ECB in the Directorate General Macroprudential Policy and Financial Stability. I'm delighted to be with you here today and to have been asked to chair this panel discussion on online platforms. This is a topic that's of particular interest to me. Some of you may know that colleagues and I in 2017 published an article on this very topic, the role of online platforms in resolving NPLs in the ECB's Financial Stability Review. So I'm very much looking forward to the discussion that's going to take place over the course of the next hour. We'll get started immediately. I think there's a lot to discuss. I think there's a lot to say at this time. It's a very interesting topic. But before I do so, I'll ask the panelists to introduce themselves very quickly. Before that, though, let me highlight the necessary qualifications from my side, that any views I express in the context of this session are my own and do not necessarily represent those of the ECB. So with that, Miguel, could I ask you maybe to start with the introductions? We try to be very brief.
Sure, thank you, Edward. Hi, my name is Miguel Arimont. I'm co-founder and CEO of Lemloni Market. We are an online marketplace, basically dealing with the secondary NPL market, especially targeting smaller private investors, not such large institutional funds and investment funds. We have over 5,000 investment opportunities on our marketplace, with a portfolio valued of around 1 billion euros. And yeah, that's pretty much it. We are an online marketplace trying to putting together or linking together buyer and seller in NPLs in the NPL market through everything through online and IT kind of based technology.
Excellent, many thanks. Gabriella?
Yeah, thank you, Edward, for inviting me to this important meeting and for giving me the opportunity to talk about technology and innovation, and therefore, of course, about Blinks. As you know, Blinks is the platform developed by Previous Innovation, leveraging on the experience gained Previous Group on the GACS transaction. Blinks limit buyer link sellers, and our scope is to facilitate the matching between buyers and seller needs. We want to change the traditional sales process, reducing the number of phases and therefore cost. It increases standardization, efficiency, and data quality of information published, making the disposal easier and faster. That is the scope, of course, of the technology development. In particular, we have eliminated the NDA, non-binding offer phase. We have implemented automatic data quality checks and reporting. We have standardized the data tape and integrated the virtual data room in our platform. And we have developed a transparent auction process. In some ways, something that you have already forecasted in 1917, no, you mean? Today in Blinks, we have more than 80 clients split among banks, financial institutions, special purpose vehicles, funds, and international investors. In the last 9 months, we made available more than 1 billion of gross book values, and we expect in the next months to have more than 800 million. I just want to conclude my short presentation about Blinks, saying that the speed of acquisition of our clients and the growing interest of our prospect is the best proof that we are moving in the right direction and support the NPL managing activity. And therefore, our expectations are to see more and important role for the Blinks and general speaking for the platform and of course for the innovative technology.
Thank you, Gabriella. Marco?
Hi, hello everybody. My name is Marco Pagani and I'm the CEO and co-founder of Whiskey. We are a decentralized NPL and performing loans trading platform based on a blockchain design based on Ethereum public blockchain. We went through a very long development of our product, and it is breakthrough with respect to the technological stack available to banks and financial intermediaries, as we have an end-to-end and open process transparent to all market participants, and in which every phase and step is recorded on the blockchain. and we start from the data tape, matching it via AI through the documentation, and then we provide for partners a wide array of analytical tools in order to assess and evaluate single names and NPL portfolios. Then we allow participants to create their own, say, shelves and marketplace in order to distribute the loans purchased in bigger portfolios. This, in a nutshell, is what we're doing.
Great, thank you, Marco. Timur?
Yeah, hello. My name is Timur Peters from Debitos. I'm the founder and the CEO of the company. We are doing now this business already since a decade in Europe. So we started our business here in Germany, working for the loan servicer, doing purely secondary market trades. Later on, we developed the market also more to the banking side. And since then, we have executed already transactions in 15 countries in Europe with a gross book value more than 5 billion, with more than 16 investors. I think it's also interesting what you can trade on our platform. You cannot only trade non-performing loans, you can also trade performing loans. So we have also integrated the whole universe of investment banks, so also trade syndicated loans and other specialized products for them. And what we have also achieved is that all the big loan servicers in Europe are also working together with us. Maybe one or not, but the other ones, I think they are all on our platform. That is also a substantial part of this product value chain. You can see the recent development in Italy, what we have achieved. We have introduced last year a new product, some kind of shop-in-shop solution in our marketplace, where loan sale advisors and loan servicers can also build up on our technology their own loan shop. And thanks to the development in Italy, we were able to achieve with the doValue Group a new project that's called, that you can find on the www.debitos.com/doLook, where loan services, where the loan servicer doValue can offer their serviced loan portfolio. And this is also something that we want to replicate going to the future, to offer this kind of technology in different counties to local market participants.
Thanks, Timur. And lastly, Alejandro.
Yes, thank you, Edward. Can I share 2 slides?
Sure.
Possible? Great. Can you see it?
Yes, indeed.
Okay, thank you, Edward. Thank you, everyone. Thanks for providing me the opportunity to explain our business model. As you know, lend market is not for non-performing loans, it's just for performing loans, and that's why I want to share with you these 2 slides. Lend market is a secondary marketplace for SME loans originated by debt funds, crowdlending platforms, and invoice finance entities. Our market model is between Mintos model and cross-lend model. As you may know, Mintos is a secondary market for consumer loans for retail investors, and cross-lend is for institutional loans for institutional investors. We offer a technology-driven platform connecting loan originators and professional investors across asset classes. We make loans investables for professional investors by transforming them into different instruments and through crowdfunding. We provide standardized loan, allowing for more transparency, better comparability, and convenient reporting. The loans are listed in the marketplace, where investor can select the loans, its tickets to invest in, and create its own portfolio. On top of that, we are developing new functionalities in blockchain technology in order to sell tokenized loans from other marketplaces. We are doing a proof of concept with Adventuris, which is a crowdlending platform, selling in lend of a mortgage loan in Ethereum. Let me give you some figures. We have more than 400 professional investors, more than 30 loan debt funds or loan originators. The deal flow during the last 5 months was 100 million euros. The average interest rate is 10%, and the type of loans are business loans, mortgage loans, short-term loans for working capital, and invoice finance.
Excellent. Many thanks, Alejandro.
Thank you.
So with the introductions complete, again, many thanks for those. And I think the introductions are important for the audience in this case, given the innovation in this field, where there may not be so much familiarity with the range of innovation that's there. So I think that was very useful. So let's jump straight into the content. As I said, it's going to be a very interesting session, I think. Maybe we start with you, Timur. Are online platforms ready and able to deal with the possible coronavirus-related surge in NPLs in the coming months? With that in mind, are there compliance issues to consider? Or are there other hurdles that you would think should be mentioned and should be brought to our attention?
Yeah, I'm totally convinced that platforms can handle these kind of loans. And also, okay, thanks to my business activity, it would be surprising if I had an opposite, an opposite idea of the business. But the question is also good because in the past, when you redo the legacy portfolios from this financial crisis, I think the biggest hurdle for online platform was the data quality. And what we have seen in the last 2 years, especially the portfolios that are not legacy portfolio from the financial crisis, you see a much more better quality from data perspective. And it's also much more easier for online platforms because online platforms are, a very good trading infrastructure. But at the end of the day, they cannot cover in all counties these kind of data preparation or data quality improvement. So they are also bound to have banks or advisors that are doing the data preparation work. And but I think especially the new loans or the loans that might occur now in the next weeks or months are in a much more shape when it comes to data quality. So I look forward to help here the bank and make the infrastructure available. And I don't see this kind of big concerns regarding data quality. When you ask about the compliance topic, I don't think we have higher data compliance requirements than a data room provider. So for sure there are data compliance topics, but I think these kind of topics were already solved in the banking environment. So there's already a clear view what has to be checked and what not. So there are for sure data compliance points that every bank has to check before using this kind of platform. But it's within a framework that is acceptable for each kind of financial institution today.
Thanks, Timur. Others, are they experiencing similar views, have the same sort of experience to date? Same views on data quality, for example?
If I can make an intervention, I partially agree with what has been said. That, let's say, we do have some minor data quality deficiencies with respect to the, say, Excel files and numbers and aggregated data. But then we have a huge problem, at least in Italy, and in particular with respect to unsecured loans with the underlying documentation nowadays. So like the last analysis of Banca Ifis of 2020, it said that you have something between 3 and 8% of documents that have been lost or will be lost in the next years. And let's say, for instance, I see a very big problem, at least in Italy, with banks that now are overwhelmed by the requests of borrowers of new loans covered by state guarantees that then have to be need a very strong follow-up. So let's say, in my experience, I did a securitization for hundreds of millions of euros related to credit that were insured by the state. And then banks lost track of all the procedures necessary to keep such guarantees in place. In particular, these receivables were related to agricultural loans to increase the agriculture in Italy, and were co-guaranteed by European Union. And you needed to do, let's say, every 4 to 6 months to send an email with the state of the proceeding. And then some banks just did not remember to send the mail. And so they lost all the guarantees. And so all this portfolio that had a face value, a very interesting face value for the guarantee of the state, it actually were worthless. And so we are seeing that every bank has a huge amount of requests for new loans of very small size. and they do not have any digitalized process for the origination. And so let's say when the loan is ready in secondary market, and so real due diligence has been carried out and all the claims have already been processed, let's say in the first securitization, then you can have a nice data quality. But then when you have phases in which banks are urged to process a huge amount of loans to distribute to the market, then they can have problems, and they usually do. In fact, you know, like we can see that all the securitization between 2014 and 2018 by the last report of Bank of Italy underperformed, especially with respect to the GACS, because like they thought they had documents underlying them, but actually they lost a big part. And when you do not have the documents, at least you lose all the interest component of the loans. And in the worst case scenario, you lose also some kind of personal guarantees. Then we can go deeper in this. I was a lawyer myself, so I really know which are, you know, the technical aspect of the problems, but this is the overall picture I see. So it's not that much of the platform that are okay, but are the banks that need to do a huge work, a huge preparation work for what is going to happen in the market if they want to be ready and not to be in the 2011 and 13 situation in which at the end they are pushed to sell in urgency all these loans and they did not do their homework, let's say.
If I can add something,
Please.
Yeah, I completely agree with Marco, but I would like to add that some steps are already done by banks. At least they have understand the importance of the quality, the data quality. And I think the other aspect that we have to consider, apart of data quality, is of course the compliance to the regulation. Because when we talk about platform, it's fundamental to manage and consider that in the platform you have different players. It's fundamental to manage in the correct way privacy, cybersecurity, considering above all the volumes that we want to manage on the platform. We have to guarantee transparency, so the same treatment for all players. We need to manage the potential conflict of interest. So in my view, I think data quality is absolutely fundamental, because otherwise the platform cannot work in the correct way. But we have to consider even the other aspect in order to allow the correct development of the platform and the correct market. And I think above all in Italy, the financial sectors, so not only banks, but the secondary market, are ready to do that because they need to increase the disposal, considering above all in this situation, the halt that we had for judicial proceedings. So because it becomes more and more important, the correct disposal, I think that the sector, so the financial sector, is ready to improve data quality if we talk about small banks, and to consider all the other aspects as regulations, or has to use different tools like platform instead of the traditional process.
That's very interesting, this idea of improvements or using different platforms. So maybe Marco, coming back to you, the crisis response toolkit for NPLs hasn't really seen substantial innovation over recent decades. I think what we have seen a long time ago is still familiar to us now. Is this changing? Are online platforms and this new way of doing business in the vanguard of new approaches to resolving NPLs?
Let's say, I think we are on a crossroad now. So on a technological standpoint, I see all the colleagues and all the platforms that are really forward-looking in terms of technology. I fortunately heard that we are not the only one using blockchain. That seems really an appropriate technology to manage the kind of inconveniences and, let's say, and lack of technological innovation in the banking and finance sector. What we are seeing is that, let's say, there are some SPVs and some investors that are already okay with the idea of making their loans to circulate. So they invest in a bulk of assets and then they resell the loans, let's say, to local partners that, especially in the real estate sector, in secured loans, are more focused on the local area. Let's say I'm selling a loan that is backed by a small house near Salerno, and you sell this loan to a very big BlackRock investment fund. Of course, they do not have all the professionals needed to valorize very small assets, such as a small loan next to Naples or Salerno. This is something that happened to me 2 years ago. And so there are already some operators that are okay to use new technologies because they do understand the importance of having a fluid market and already quoting their loans on possible shelves in order to dispose of them when they need to, or perhaps even better, to receive business proposal from third party that are interested in developing some kind of business with the asset underlying securitization or NPL portfolio transfers. On the other side, I was a banking lawyer, so I see that actually we are seeing some banks that are doing some kind of innovation, but if we do not find a way to link banks directly to technology and to the secondary market, then you have to remake again all the process. Not all the times, because once you have onboarded on a platform that has a sufficient data quality system, an end-to-end system of some sort of way that can process all the data and aggregate them and mesh them perhaps with the documents. And I think everybody is moving in this direction, because when at first we have seen platforms only, showing data tapes and not connecting them with the underlying documentation via data room, then you have, of course, a problem, because you don't know what you're buying. You're buying numbers, and then the asset is represented by the documents. So it would be much easier, of course, if banks decided to go digital from the origination phase, because then you already have all the documentation in place that is coherent, because it's constructed in a way that then is connected with the data tape on a European level data quality. And then everything can be compared, and then you can do a very nice job in terms of risk assessment. And then when you provide, let's say, very fast analytic tools, and then you have very grounded databases, then you can increase the speed, velocity, and liquidity of the market. That is what everybody, I think, is these conferences want to do. So provide tools for operators, but for overall economy, to get a more liquid debt basis, so that banks can originate and distribute, and then can grant new loans, and then help economy in this recessive downturn that we are witnessing. So I see that really what we're still missing is a step forward from banks that, at least in my personal experience, need to be a bit more confident into experimenting something new, that is perhaps using a platform rather than going through a very long securitization deal with hundreds of pages of made in paper, actually, that are not digitalized from the start. And then at least, let's say, even to go and process the representation and warranties in this kind of transactions, if you do not use a platform, then you lose the databases through which you have negotiated, because you close the data room. And so to demonstrate what was the basis of the negotiation is not so easy. And then you have to discount that in every single step forward. So of course, using an end-to-end platform should be really useful. And then we see, as I said before, this kind of behavior in smaller participants, but we do not see yet very big financial institution originating digitally. This is not for sure, but at least using a platform to follow the first stage of the first securitization when they want to clean their balance sheet. That would be extremely useful for all the market, because banks think they have an operational problem in doing so, and so sometimes they don't even do the vendor due diligence. They wait for the buyer to come and do the due diligence. This was my experience as a lawyer, and then you have to discount that on the price, and so you have a lot of losses. And then you need to increase your speed in next transaction. You get less confidence, and so on and so forth. This is kind of vicious spiral in which bank had been already in 2011 and 13, and we hope they are not in the next few years, when they will have a huge bulk of receivable to process.
Great, thanks, Marco. Timur, you mentioned you've been in the business for a decade, or almost a decade. Have you any view on this topic, on on how innovation and technology has changed over that period?
Yeah, sure. So I would confirm that in any case, the last 2 years, banks take this very serious to digitalize internally, I would say so. Well, for sure, not all of them maybe find the right tool or the right solution, and some projects fail because of different reasons. It's not only in the NPL space, different areas in the banking environment. But I see in the last years, and especially this year, and this was also developed also due to this Corona crisis, this kind of need for digitalization was accelerated. So I see a lot of, even in the Corona crisis, we were able to make transactions because the people were saying, okay, I'm sitting in the home office. I have not the possibility to make an on-site due diligence on the bank. And the banking side the same. They don't want it to have investors locally in their office to review the data. They had to have some kind of digital tool. And I think the platforms for sure in general will benefit from this kind of digitalization and this kind of development. Also, take a look on the other side, and you see also the regulator, what happens. The first tools or the first things that pop up when a crisis comes is again a bad bank model. So on this side, I think is still some innovation necessary, I would say so.
We still have some way to go.
You don't have to make a statement regarding this, but you understand my comment.
Well, it's interesting. I think, yeah, what you mentioned, and Marco mentioned also securitization. And as I mentioned at the outset, we published an article on this topic in 2017. It's already quite some time ago. And I think some of our thinking has evolved, and we really see potential, myself and my co-authors, of online platforms to be at the center of many resolution options. So we see no reason at all why platforms shouldn't have a role to play in securitization. And if I recall correctly, Sareb, the Spanish asset management company, was investing in the possibility of an online platform in which it could dispose of its assets. So if an existing market player is there, there's no reason why more traditional NPL resolution tools can't actually harness the innovation and technology that's delivered by platforms. But also, you mentioned that deals were continuing through the lockdown. Maybe, Gabriela, from your perspective at Blinks and Prelius, is this emerging role for platforms being borne out in recent activity and recent interest from buyers and sellers? What have you seen in terms of inquiries and volumes in recent months, notwithstanding the lockdown that we've endured? And what do you think we can expect to see in the coming weeks and months?
Based on my opinion, the emerging role of digital platform can be clearly observed in increasing step. Blinks has experienced a rapid growth of primary and secondary market, both in seller and buyers. On one hand, as I said before, this has been caused by secondary market sellers, which have increased the disposal because of all of the judicial proceeding. As you know, the court closed in Italy in March, causing the coronavirus. On the other hand, primary market sellers are expecting an increase of NPL stocks, consider the economic environment to slow down, and therefore they expect to have an increase of stock. That means they need to manage in a different way. So the disposal is, of course, an alternative solution, an alternative strategy in order to keep under control the NPL ratios as a request of the authority. Therefore, we expect to have an increase of the use of alternative instruments, not only the standard process, but even the platform. And the other thing that can increase the use of alternative solution, or in the case of the disposal process, is the tax incentive that the Italian government recognized for Italian banks, always in order to keep under control the ratios. Of course, buyer can see the opportunities in this situation, and for sure they don't want to let go away these opportunities. And they use the platform is the best way because they can select the different portfolio that the banks can put on sales. And everything is in the same place, is managed in the same way, as we said, with the standard approach in terms of data tape, in terms of timing in order to conclude the transaction, in terms of transfer agreements and so on. Therefore, I think that the platform can be really an important instrument in this moment, even considering the distancing measure, the social distancing measure that any government has implemented. And therefore, we have to find a different way to do roll-up or to have a look at the documents. And again, it becomes fundamental to have the digitalization of this information. Moreover, to use platform can allow different players to have access to these portfolios, not anymore linked to the size of the investors because they need to be invited by the banks, or considering the geographical areas. The platform in some way put all the players in the same, let's say, in the same situation, the same setting, and therefore can facilitate the correct achieving of this. Blink's therefore has experience in this sense, because in the last months we conclude different transactions. We made available, as I said at the beginning, important volumes of non-performing loans. And based on the request that we have from our customers, we expect to have the development of the platform, not only for non-performing loans, but for the likely to pay, and probably in the future for the other kind of loans. So just to conclude my speech, I think that the platform can get really important, can have a really important role in order to support the economy, first of all, and second, in order to support the financial sectors. So banks and secondary market.
So I'd like to bring others in here if possible. Miguel, Alejandro, have you seen interesting trends over the last weeks and months? Have there been an increase in inquiries, volumes, interest expressed in the platform? What have your experiences been?
Well, in our particular case, especially in the NPL secondary market in Spain, yeah, I think that the primary market players are I mean, in Spain we're still not we're still with harsh restrictions in terms of mobility and what things you can do and what you can move. So I think that that's going to take that's still going to take a couple of months. It's probably going to run into August or September. Right now, the primary market players are sort of in a or the feedback we get from them is that they're in a position of wait and see how the market sort of responds to these crisis or special situation, if you want to name it that. And so I mean, I definitely do foresee that there's going to be an increase especially in the NPL market in Spain. We foresee that it might increment the actual market between 30 and 40% before the end of the year. But it still has not come out yet. I guess that the primary market players are still in a position of wait and see how the market reacts to this whole new situation that we're all faced in.
Thanks, Miguel. Alejandro, I think your business model is slightly different, but what has your experience been?
Well, sure, Edward. The experience is as Miguel said before, no? The activity is increasing a lot. From a performing loans perspective, we have a lot of activity in our platform. There are other platforms that are in the primary market, such as the crowd-lending platforms. There are a lot of interest from SMEs looking for alternative lenders, but for the investor side, it's not time to invest in those products. No, we need to wait for the next year and see how the investors are going to invest in these products.
Many thanks, Alejandro. I'm seeing a question pop up on the screen, and actually the question is ideally placed for us to pivot a little bit away from the practical, a bit more towards the conceptual. The question is from Nigel at the Loan Market Association, and he asks, currently some 75 billion of loans trade annually in Europe on universally accepted terms. Wouldn't adoption of those terms by platforms be an obvious way to accelerate deal flow? So maybe, Miguel, if I could start with you, will online platforms stimulate greater standardization in the deals process?
Sure, I mean,
and will this lead to more open markets, deeper markets, wider participation? And is there anything, if there was a message for public authorities, is there anything that they could do to try to facilitate this?
Thanks for bringing that up, Edward. I mean, that's a really good question. Without a doubt, obviously, I guess that the whole point of us being in this panel is to promote and to discuss these issues. That is not only LEM Loaning Market's goal and view for the future, but I guess all the online platforms we are here present at, especially either NPL process, either in the NPL business, in the PL business, and other business across. LEM Loaning Market operates specifically on the secondary NPL market, mainly targeting those smaller private investors. And by doing so, the capacity to offer user-friendly tools to our less corporate clients is key. Either we try to simplify the whole process by using IT tools such as free online registry, automation of pricing, searching opportunities through geo-positioning, mapping, and so forth. By doing this, we are able to reach new clients who beforehand didn't have access to this type of investment. We definitely wish that our solutions, not only our solutions, but the whole industry solutions become market standard. I mean, I guess Gabriela and Marco brought up some really interesting points when it comes to digitalization of documents. I think that's whole key in this industry. So that goes when it comes to the buyer side. When it comes to the seller side, and on a regulatory basis, I guess Edward, you could bring up pretty much many more interesting points than we. However, in Spain in particular, we've seen over the past months and years, especially, there has been many advances proposed, and there's so many regulatory sort of inquiries and situations coming forth, such as an example would be the proposed sandbox of the regulatory CNMV, which is Comisión Nacional del Mercado de Valores, which is precisely aimed for proptechs and fintechs, sort of to, when it comes to on a regulatory basis, standardize and sort of giving more opportunities to these kind of tools and platforms to become standard in the market. I am positive that the use of online platforms will become standard in the NPL flow in the future deal process, but not only in the NPL market. I mean, there are, as Alejandro said, also in the PL, in the performing loan sector, and many other sectors. I think that digitalization is key in the market. We have seen some advances over the past months and years, but there's really much to go, and we definitely looking forward to see these changes in the future.
Great, many thanks, Marco.
Yeah, I have a couple of. Yeah, I was writing to this group because I didn't want to forget my observation with respect to the question. So I think it's we have two things to speak about. The question of Nigel Houghton from LMA Association. So Of course, it would be really nice to have some kind of standardization across all Europe, if not across the board, to have very fast trade. So, like in my career, I wrote a lot of derivatives as well when I was helping banks to negotiate very big loans. And then you have these ISDA standards that everybody knows. Actually, is a bit hermetic, the standard, and if you're not really inside the matter, you risk of making very bad deals, because then the terms and conditions are easily you can easily manipulate them if you know what you're doing, because a few more no's inside a sentence can really change all the structure of a derivative. I don't think loan transfer documents are so fragile as derivatives that have been proven to be a very big problem actually for some municipalities in Italy, for instance. I'm thinking about the derivatives that Milano town has with some German banks that have been inquired by the tribunals and courts in the last few years. So on the one side, yes, to have a very standard set of documents would really help market participants to close deal faster, and to have also, let's say, a standardized kind of set of representation and warranties in which flag which you want and which you don't, because like after 10 years in NPL market following the last financial crisis, I think we have seen a lot of different ways of writing stuff, and then we can find some kind of common ground, common agreement on which are the most common terms and conditions, so that we can increase speed. On the other side, especially with respect to loan market association, it really depends if I do understand, because I refer usually to loan market association as an association based in UK, if I'm not wrong. And so it really depends on the outcomes of Brexit. Because like me as a platform innovator, I would say yes, why not? Then if I was speaking to my clients to include in their workflow an LMA standard transfer process now, I would say wait 6 months, wait 1 year, because we do not know which will be the terms on which Brexit will be implemented. Because then if you follow the UK ways, and then the paths between EU and UK, and then you are using English standards, actually can be a burden more than a facilitation on the European market. So it really depends what happens on Brexit. In general terms, I see also on a technological standpoint, something that I would really like to propose to other platforms other than mine. It would be really nice to have, let's say, a common set of, let's say, digitalization rules. Let's say I use blockchain. Why? Because like I want my clients to at the end have some system in which they can exit my platform and use all the digital assets they produce there. This is why we use Ethereum for first instance, because it's something open. You don't want to work with Whiskey no more, it's no problem. You download all the files of the data tape, the token, and then you can use them on other platforms. We use a commonly accepted standard. Then it's very technical, but it's very common to use in Ethereum. That is the most used blockchain, at least now. And so it would be really interesting to see if we can find some kind of interoperability between platforms, because perhaps, you know, I have some kind of buyers and sellers in my platform that can match with someone else buyers or sellers, and so to work, let's say, on some kind of cross level can really increase liquidity and also increase business opportunity for platform deployer and developers like us, but also for market participants.
I think indeed, looking to the future, that interoperability could really be key to having very deep secondary markets, and rather than having a sort of a patchwork or fragmented marketplace with individual players, a connected system, as challenging as it may be to achieve, would really serve the market tremendously well. So let me, given we're 15 minutes from the end, let me move to the last topic I had in mind, and it links a little bit with this issue of deepening the market. We've already touched on the issue, of course, that some of your business models don't just focus on NPLs. We focused a lot on NPLs today, this being NPL Virtual. But Alejandro, your business model is focused, I understand, on performing loans. do you see in the future scope for the other platforms to move into that sort of space as well? Is there scope for you to move into the non-performing space? What sort of challenges, issues do you see here? And I'd be curious to get the views and responses from others in the panel as well on this topic. Alejandro.
Yeah, sure, Edward. Well, first, I fully agree with Miguel when he said that the sandbox is going to be key for to transform and to innovate in different platforms. So we are waiting in Spain to launch the sandbox. Saying that, my view for the performing loans in Spain, at least in Spain, I think next year will be the momentum, not only for non-performing loans, but also for performing loans originated by banks or debt funds. Because of the COVID. The COVID will change the way the banks or funds used to sell portfolios or loans and the investors used to buy it. At least in Spain, the economic consequences of COVID will force the Spanish banks to initiate an aggressive deleveraging process by 2021, motivated by the bank's consolidation and the increase of defaults. This will increase private debt market to accommodate the SME financial needs rejected by banks. So, in parallel, those debt funds with a lack of liquidity in the market and excess of demand for alternative lenders will force the debt funds to have a secondary market for funding their loans and expand their financial capacity. On the other hand, the confinement has accelerated digital transformation, changing the needs of bank clients. So it will become very important to have digital channels to be able to sell financial products. And investors with high volatility in the stock markets will figure out to diversify their portfolio with non-correlated alternative investment products from the stock market. On top of that, many investors are worried about the real estate market crash next year. They are concerned about the impact of the coronavirus pandemic on housing prices. And this concern will cause to diversify their portfolio investing in performing loans. So the conclusion from my perspective, and this is my view and it's purely personal, the private debt market will increase a lot next year and will need a secondary market to accommodate all the SME rejected loans by the banks. So yes, we are in the cornerstone to accelerate the transformation of this sector for both sides, for the shadow banking and for the banks.
Very good. Thanks a lot, Alejandro. Would others like to come in and comment? I think others really have a focus in their business model on non-performing loans. Is there appetite to move beyond that accounting classification?
Yes, from my side, in any case. What we have seen, and this is also what makes it difficult in the performing space, there is not such a big bid spread that you see in non-performing loan space. So there is not such a big need to make an auction process in that area. For sure, there are a lot of deals happening, and thanks to the Loan Market Association, this is really standardized in this regard. But most of the deals are happening with 3 or 4 parties, maybe verbally negotiating on a deal near par, or maybe with a very small discount. So what we see in general, there is this kind of high yield market also in this area, where there are discounts from 10 to 20%. And when you see also the current activities in the market when it comes to aviation or touristic or retail industry, where you see a lot of big chunks of still performing loans are traded for sure far beyond par, because they are in industry now actives that are heavily impacted, but they are not yet non-performing. So and in this space, and also this is maybe a topic Alejandro wanted to touch as well, that also in the SME space and other industries, when you go to big restaurant chains, hotel chains, and so on, I think there will be a lot of need to trade or to offload on the secondary market, even performing loans, when it comes to readjustment of risk, or when it comes to readjustment of industries, and also changes in the economy. So there is a need, and we will see for sure this in the next weeks and months much more than the last months, I would say so.
Great, thanks, Timur. Anyone else on that topic before we move towards wrapping up?
Well, I would just like to bring a point specifically in the Spanish market. I mean, we have to, Timur mentioned the transformation of between still performing loans that become to non-performing loans. I mean, I guess the case of Spain, this has impacted over the past year or so, because we are looking at what we call, or what we start to call, sub-performing loans in Spain, because just up to last year, up to July of last year, the regulatory processes of foreclosing NPLs changed last year, and when before an NPL was considered to have, or if was considered if it had at least up to starting 3 months of default payments. That changed last year, and now it's, instead of 3 months, it's up to 12 months. So the scope and the range changed a lot in the Spanish market. So what before was an NPL now is still considered officially a performing loan, because it's still not on the stage of non-performing loans. Those we call sub-performing loans, because we definitely foresee them in coming to non-performing loans. So I guess that's what we see, that that's why I foresee that the market over the past 2 years have had an input of NPL of around between 15 and 20% input on the market. And I guess that due to this change this year, and due to this COVID-19 whole crisis or situation, or special situation, that has stalled, and that mixed with the new regulatory changes will probably have a direct impact on the incomes of the NPL towards 2021 and next year. So that's going to take a while, but it will definitely come. We definitely foresee that coming of instead of a 15-20% increase in the market, up to change up to 30 to 40% increase in the market.
Great, thanks, Miguel. Marco, did you want to come in here?
Yes. So, like, with respect to the kind of assets that we will be seeing in markets, I think we should really be careful with respect to everything that is not an NPL today, because, like, in NPL we have broadly 3 big families. So we have real estate NPLs, mortgage-based, that are quite easy, because, like, you have an underlying asset, and the value of the NPL is represented by the capacity of the operator to go and get a very nice price for the real estate asset that is higher than the face of value that he paid for the loan. Then we have consumer loans and personal guarantees. They are smaller size, but actually, if they are brought to very aggressive market players, can be a problem on the social economic impact they can have. And then we have what Miguel said, they call them subperforming loans, we call them unlikely to pay loans in Italy, at least. And actually, if we think about corporate loans, I do not want to see such loans to be treated as, okay, let's say most of such loans actually get to be non-performing loans. But if we start to treat them as non-performing loans, actually we risk to increase the waterfall effect of chain failures. Because, like, what we see market operators that try to extract value immediately, while such loans need to be restructured in the next years. Because we start to say that everything that is not perfectly performing should be liquidated and should not be given any more finance, then let's say platform like ours will have a tremendous success, because we will be overwhelmed by loans and assets, and the economy will be totally disrupted. Because not granting any new finance to companies that of course will be in financial distress in the next 2 to 3 years would be a really a really bad intervention by banks and central banks on the policy levels. Because if you start to tell to market participants that everything that is not a class A asset has to be liquidated and be treated like NPL, then you will have a lot of foreclosures, and then all the people that have something to do with such companies that will be foreclosed will fade themselves, causing a ripple effect of a very high magnitude in a recession that big as the one that we are facing. While, say, sub-performing loans or unlikely to pay, actually a very strange asset, and is not possible for me to consider them as only one class, but have to be treated, let's say, more on a consultancy level and new finance level. Let's say we have a new bank here in Italy. That's a very nice bank. It's called Illimity. They have this kind of business. So they buy unlikely to pay loans, and then they try to restructure and to reinforce the management team, provide a new business connection in order to valorize the unlikely to pay they bought at this level, and then they can sell it that level when they add new finance and new services and new business connection. But actually, it is something that needs to be addressed in terms of business development and restructuring, and then having a platform to liquidate it might be interesting, but you need to add other components that are not only the facility to sell the loan and to process, perhaps to, let's say, everything that we said about data cleansing and, let's say, ease of making risk assessment could be fine, so that when a bank has a new TP, perhaps they cannot process it because, you know, all the banks disincorporated their servicing division and they sold it to other parties, so they don't have the personnel actually to follow distress situations. So perhaps it's okay on the primary market to have, let's say, this kind of shelf to sell, but then you really need to be careful about treating these assets as NPLs.
Well, if I may jump in, Edward, just a quick comment. I totally agree with Marco. I mean, these loans in this special situation are called subperforming loans. I'm not telling them to be treated as non-performing loan. I mean, that whole gap of between, or this is Spain, between 3 months to 12 months gives a whole new window for reperforming loans, where an investor in the secondary market could buy that subperforming loan, refinance that, and become reperforming loan. That's a whole new window in Spain that we foresee that to be increased within the next couple of months and years. I mean, we always say that foreclosure is the last option, and definitely not treat subperforming loans and non-performing loans. We definitely first of all look at the possibility of transforming them into reperforming loans, and I know platforms like Lend Market in Spain specialize in this kind of transformation, where they give investors the possibility to achieve certain yields by doing this process.
Great, many thanks. Sorry, go ahead.
Yeah, I want just to share with you the experience that we have in Blinks. We are developing some functionality in order to manage the pay. Of course, we are not talking about portfolios or big portfolios, but we are talking about single name. And the purpose is to find the correct investor that can get better the situation, or maybe can decide, as the other colleague said, to liquidate the position. It depends of the stage of the likely to pay. But in any case, I think the platform can be used if we are able, this is really the challenge, if we are able to create a different panel of investors, because as you know, when we talk about a likely to pay, the company that can buy this kind of loans are different compared with the non-performing loans. Because we have the contract still live, let's say, and not only the credit like for the non-performing loans. But I think this is for sure is a process, but I think considering the needs that we can really feel in the market, above all for the banks, that the situation for the likely to pay, the stock of the likely to pay quite high, I think we have to support them even in this kind of sector, in this class of loans, and we are doing that.
Yeah, I think we really get more away from issues around bank assets and more into real economy type issues here, which again are, of course, are very important. And previous speakers have really made that point. Marco in particular, I think, about the possible impact of a large scale wave of foreclosures. I'm very conscious of the time. It's now just 1 minute past 5. We have one outstanding question, David from IHS Markit. Timur, maybe you could have a go at this question, given your exposure to a couple of different jurisdictions. And the question is, do you feel that differing accounting treatments of NPLs across Europe is impacting liquidity?
Yeah, for sure. But I think they are not so different anymore right now. And going to the future, also the provisioning rules are more or less harmonized, maybe except from UK. Maybe I've understood the question wrong, but what are the big differences in Europe? Maybe now this one in Spain, there are some adjustments locally, but not so big differences, I would say so. Huh?
Okay, anyone else like to come in on that question? No? Okay, we don't have any further questions, not yet at least. And again, being conscious of the time, I think it's okay that we wrap up now. Unless anyone would like to make any final remarks very quickly. If not, very good. Many thanks to all. It's been a very interesting discussion. Thanks in particular to the panelists, Miguel, Gabriela, Marco, Timur, and Alejandro, for sharing your insights. And also thanks to SmithNovak for facilitating us today. Thanks also to the audience for joining us and for raising those questions. Thank you and goodbye.
Thank you.
Thank
Bye.
you.
Bye.
Thank you.
Bye-bye.
Bye-bye.